management, Ravi Chawla, who's the Managing Director and Chief Executive Officer of the company, joining in. Thanks, Ravi, for taking the time as always. And so just trying to understand what the sales volume in the first quarter was against 37.5 million litres in the previous quarter. What was the kind of growth in absolute terms?
Well, last quarter last quarter, which was quarter four of financial year 22, we did 33,000 KL in our lubricants. And this quarter we have done 1,000 more, 34,000. So that's been a very good quarter for us. And I think compared to last year, of course, there was a COVID impact in the same quarter, quarter one. We've grown very well compared to the last quarter, quite ahead of industry in all respects. We've grown our volumes 36%. Our profits have doubled. EBITDA has doubled. PAT has also gone up 82%. So very good results compared to last quarter. But you're right, when you compare it to the previous quarter, we must add here that March quarter is usually a very strong quarter for us, which has done well. And we have seen some, I would say, slightly lesser than March, but happy that the trend on volume is positive. The margins are slightly impacted, though our mix has improved because we have seen the prices of raw materials going up. The price increases have been passed on. They will go staggered for the B2B business, which is part of our business also. So very happy to see that the demand has gone up. Our B2C business is growing. Our distribution touch points have gone, and B2B and industrial is doing very well, including the OEM businesses, which we have a number of OEM tie-ups. So overall, a strong quarter. And if you compare to last year quarter, of course, very good result. But if you take quarter four, which was last financial year, still I would say the challenges are there on the margins, and we are managing it well. We must also add here that there have been additional costs in this quarter versus last year, where A&P travel has happened. Last year same quarter there was COVID restrictions, so we are putting in the inputs in the market to make sure the connect is there, the distribution is going up, travel has gone up.
Leading into the next question from what you've said, can I then assume that the revenue growth was driven primarily by price increases that you've taken, and the fact that no, is that not true? So then volumes.
Okay. Volumes have been all-time high at 34,000. Yes, compared to the last quarter, which is a strong quarter, quarter one, which is April, May, June, has done better, marginally better, 3% better in volumes. So certainly volume growth is happening, and it's a strong quarter also because 34,000 is the highest volume we've ever done in the history for core lubricants.
Right. Good morning, Mr. Chawla. This is Cheryl also joining in the conversation. And let me talk about a matter that affects most consumers, also companies, and that is the crude prices. They've actually cooled off from their peak. So if the crude prices actually sustain at these levels, then do you plan to roll back some of the price hikes that have already been undertaken?
Yeah, you see, what happens is if there is a significant drop, obviously 1-2% drop is usually there are schemes, others we adjust. But if there's a significant drop, the prices do get rolled back. In fact, with our B2B customers, there's a price variation clause. So it goes on the indices. What we are seeing is that there is obviously an impact of crude, but it has stabilized. Now in the base oil that has a 2-3 month lag time to what crude happens, it has stabilized in the last few weeks, but foreign exchange obviously is a challenge which happens. So normally we would always look at a healthy margin of 15% plus, we say sometimes 16 to 18, but the margins came down last quarter for 14%. Now it's this time come down to 12. Of course, costs have also gone up. We have added travel and A&P and others going up this year. So definitely quarter two, we'll see the margins are going to be, the prices are coming in. And hopefully in quarter three, if the crude is steady and base oil also is steady, foreign exchange also tempers down a bit, we will see improved margins from quarter three onwards.
Okay. Just to follow up on that, and one more question then. So if you're talking about improved margins, are you talking about heading up closer to the 14% mark once again?
Yes.
Okay. And the other thing, of course, is the volume trajectory. You've said very clearly that you're very positive on the kind of growth that you've seen in volumes on a year-on-year basis in the first quarter, expecting that to improve. Demand scenario is looking good. So give us a ballpark figure or an expectation as to where you see volumes in the rest of the financial year.
Yeah, so very good question. As an industry, lubricants normally grows 2, 3, 4%. Whatever GDP, kind of half of that is usually lubricants consumption growth. And we have seen the industry, obviously this year with GDP is also going to be positive. Everything is coming back. OEMs are coming back. The consumption is there. Travel is there. We would expect that lubricants industry would grow 3 to 4%. And what we are seeing in the last few months and even the quarter, except the motorcycle segment, which is slightly, I would say not picking up, and agri, which which kind of we were expecting more, but the monsoon is delayed. All the other segments, industrial, the car segment, the commercial vehicles, tractors, commercial vehicles, we have seen a very good positive growth. So if we look at the industry, if it grows 3 to 4% in lubricants, normally we grow 2 to 3x minimum of the growth rate. So we would expect a double-digit growth in volumes for Gulf. And overall, if the industry, I'm positive the industry will also grow 3 to 4%. Of course, motorcycle, as I mentioned, is a challenge. The prices have gone up. We've taken a lot of price increases. People are, slightly probably not, the retailer stocking is slightly low because they're looking at these price increases coming in, then getting passed on. So looks very good. And India is, as we know, there's penetration of vehicles is still not very high. Rural markets also are seeing a lot of second-hand vehicles coming in. So these are good trends, and new vehicles also are getting sold. So it's a good, I think, a mix of hopefully looking at industry growth also, which will help all of us.
All right, so on that positive note, we'll leave it there. Thank you so much, Mr. Chawla, for joining us on ET Now and giving us a flavor of the quarter gone by for Gulf Oil Lubricants and the way ahead. That was Mr. Ravi Chawla, who is the MD and CEO of Gulf Oil Lubricants. But on that note,